The physical markets are now beginning to negate the paper markets. Central banks are petrified of rising gold. They've attacked silver harder than they have gold because because they can, it's a smaller market, and B, because an explosion in silver is the fuse to an explosion in gold.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 13th through May 20th, 2024, while supplies last. First, we feature 1 ounce Gold Krugerrand at $49.99 over spot. We also have 2023 Silver 1 ounce Krugerrand at $3.10 over spot. And finally, we have Silver half ounce Canadian Polar Bears at $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Bill Holter, now from billholter.com. Bill, thank you so much for joining us today.
Thanks for having me back, Elijah.
Well, it's great to have you. We really appreciate your time. We did want to discuss one of your most recent articles you have published. Now, you were saying that essentially what is happening in the precious metal markets right now is one of the most significant changes we've seen. One of the things you've highlighted is that the physical market is actually now taking over. And we've seen over the last couple of days, silver really touching that $30 level, silver trying to break into all-time highs again. Can you kind of lay out what is happening in the gold and silver markets?
Yeah, the physical markets are now beginning to negate the paper markets. Go back to October, November of last year, and that's when the moves in the metals started, and they really went into gear the end of February, early March. That in gold, the big buyer has been China. You're also seeing pretty good buying out of Europe. In silver, the huge buying is coming out of India. And both metals got pretty overbought in early mid-April. We had a pretty good, decent-sized pullback. The prices relaxed, and the gold nor silver were overbought. And then just in the last week and a half or so, you started to see some strength. And I picked up on the article that I posted. I posted 3 charts: gold, silver, and the miners. I used the HUI index. And what you'll see is that the HUI has gotten to the point of close to breakout. It's breaking out at this point. Over 275 is a breakout. Obviously, over silver is a breakout. And those aren't new highs until we get to $50. But there's really nothing on the chart between $30 and $50. So once we get over 30, I think 30 is going to become the floor. And you probably, I'm guessing within 3 to 6 months' time, you'll see $50 in silver. And of course, gold is again pushing up against 2,400. Over 2425 is a new high. If you look at the charts that I posted, you can see on the very bottom of the chart, you see the MACD, that's the moving average convergence divergence. And if you look at the very current time, you'll see on all 3 charts, you'll see a hook that's forming, and the HUI and silver have crossed over, and gold is lagging just a little. The hook is not fully completed, but we've got a crossover in silver and the HUI, and that's going to create momentum buying in silver, gold, and the HUI, and that'll push these things into new highs. And yes, we're going to see huge volatility, but the paper markets no longer rule the price as they have in the past.
And you've mentioned how what we're seeing right now is not so much a move upward in the metals, but a move downward in fiat currencies. And this is really signaling that fiat currencies are collapsing. Can you expand on that?
Yeah. An ounce of gold or an ounce of silver that was mined 100 years ago, 200 years ago, 1,000 years ago is still only an ounce of gold. Nothing changed. It doesn't go up. It doesn't go down. It just is. What changes is the value of the currencies. And watching gold, silver, and even the cost of a cup of coffee going higher is a function of the fiat currencies losing purchasing power.
Now, obviously, we can't give financial advice on this channel, but your personal perspective on where we are in the metals markets, if people are looking for a pullback or they're not sure they want to buy at these, higher prices than we've seen in the last couple of years, what do you say to those people who are waiting?
Good luck. Good luck with that thought process. The reason I say that is, just look around you. There is a vast reset from west to east happening. And once that happens, you're either in silver and gold or you're out, and you won't have the ability to get in. So if you think these prices are high, wait 3 months, 6 months, a year. If were China to revalue their gold, and the way to describe that, not revalue gold, but devalue their currency, that's going to price the metal. So if you're trying to time this, good luck with it. I think that's a foolish move.
And you do mention how really the physical market is taking over. Can you kind of explain for our viewers how the paper market and not the physical metal has been in control of the price for so long now?
Yeah, the center of the financial world for years and years has been New York and been London. And you've got the COMEX in New York, you've got the LME in London, and those paper contracts are what, for years and years, have priced the metal. Fast forward to where we are now, and what you've got is a premium of $2 to $3 in silver and $30 to $50 or more in gold, Shanghai over the Western prices. So what's happening is you're getting buying in the West, demanding delivery, and then that metal gets shipped to China, and it's an automatic. You're locking in a profit as soon as you buy the metal. You buy the metal, you sell the metal at the same time, then you deliver it, and you book the profit. So metal is being bled from west to east. And if you're a student of history at all, power flows with money, and money is gold.
We do have quite a few viewers' questions here on the precious metal markets. I guess we'll start with this one from Kathleen. If gold and silver hit their peaks and you sell, what will you do with the dollars or other currency that you sell gold and silver for?
Yeah, that's a good question. And the answer is, you're not going to sell gold or silver until there's a currency that you can trust, until there's a place for you to put your money. But we're nowhere near that. We're nowhere near a peak, so to speak. The peak pricing in gold and silver will be, if you want to call it, the bottom pricing on fiat. And fiat ultimately can go to zero. So the inverse of zero is infinity. So I guess my answer is, I would answer the question with the same question: where would you put the money? And if there's no place to put the money, then why would you get out of gold or silver, which cannot bankrupt? It can't be devalued. So you sit with the metal until you find a currency that you can trust.
I think that's very interesting, because if fiat currencies go to zero, then precious metals go to infinity, right?
And so does a cup of coffee. Everything will go to infinity.
It might be hard to answer that question of what are you going to do with the metals, because we don't even know what kind of monetary system we're going to have after this one collapses.
Right.
Now, moving on here, we do have a question from Matt about the gold-silver ratio. And I guess this is kind of along similar lines. Well, what do you do with the metals when they become overvalued? But there is a very good case to be made that silver is much more undervalued than gold right now, given the gold and silver ratio being about 80 to 1 right now. And that if that ratio decreases, then you could swap silver for gold. Your perspective on that?
Yeah, I mean, I've been talking about the ratio trade for years and years. Silver is way undervalued to gold, and I urge people to overweight in silver. And at a later date, as the ratio comes down, I mean, here we are at 80. If the ratio came down to 40, that would mean silver doubled the performance of gold. And if you swapped silver for gold at a 40 ratio, you'd end up with twice as many gold ounces than if you just bought them outright today. So you'd be buying gold with you'd be buying less expensive gold with more expensive silver, and you'd end up with more gold.
And can you detail this for our viewers a bit more in detail, why you think that silver is so undervalued right now? I mean, obviously, as we talked about the beginning of this interview, how silver is likely to move to $50 given where the chart is. So that's a significant move from where it is right now and almost doubling. So it seems like the upside potential is much greater for silver. But as for just the fundamentals and not the technicals, what are some of the main reasons you see silver being so undervalued right now?
There's really only one reason, and that's God. You know, God made the metals in the crust, and he made there's 10 ounces of silver for every 1 ounce of gold. So that's God's ratio, 10-1. And man's ratio is 80-1. One of them is right and one of them is wrong, and I would bet on God rather than man.
That's a very good point there. We do have many viewers' questions about pre-33 gold, and it is interesting how the premiums on pre-33 gold it's very similar to if you just buy bullion coins right now. So it seems like a good time to maybe move into those coins. I guess, can you give your broad overview again for our viewers about pre-33 coins? There's questions about confiscation. Are they less likely to be confiscated? Your take.
Yeah, pre-33 gold, I mean, in law, they are considered collectibles. And if there was a confiscation of bullion, those would not be affected because they're not bullion, they're collectibles. Going one notch down the totem pole would be eagles. Those should give you some protection against confiscation, because it would be very difficult for the mint to sell you an eagle today and then next week demand that you sell it back to them. They did it in 1933-34, and it was they could do it because it was the money of the realm. But gold eagles today are not the money of the realm. Gold eagles are sold to the public by the mint. And they really turn around and say, oh, well, we sold it to you, but you can't have it. So as far as a confiscation of gold is concerned, your safest holding as an American would be a pre-33 gold. The next safest would be eagles. And on the topic of confiscation, the U.S. and Canada are considered the safest havens for mining projects. And I would suggest that if we do go through a confiscation, I am not so sure they're going to confiscate the individual coins. I think what they'll do is they'll nationalize the mines, because that's the raw supply and there's more of it.
In that case, do you see a major risk in owning mining stocks?
Well, yeah, I think there is risk in owning North American mining stocks, but they're so beat up across the board. A well-diversified geographically portfolio of miners should do very well. Should do even better than silver, because there is operating leverage. And we could spend an hour talking about this, but yeah, there's more leverage in the miners than there is in anything else.
Now, still on the topic of confiscation, Derek wants to know your perspective on gold jewelry. His personal plan is that if the government was to confiscate gold, he'd melt down his gold coins and make them into jewelry. And to his understanding, FDR didn't confiscate gold jewelry. Your perspective on that?
Yeah, that's a plan, but the problem with that is how do you transact with it? How do you offload it at a later date? You obviously got to test for purity. I don't see them going door to door, because you'd have in the first day, you'd have, several shootouts and deaths. So I don't see them going door to door. I don't think there's any need to melt down perfectly good gold coins into jewelry, because I don't think jewelry is not going to function. It won't work from a trade standpoint because the other side doesn't know how much gold is in that piece of jewelry.
And that gets back to the point of having U.S. minted products because they're probably the most recognizable.
Correct.
Now, on the topic of a currency crisis, we have quite a few viewers' questions on that. This viewer wants to know, in my mind, the average person should focus first on food security, then wealth preservation, assets like gold and silver. Can you draw a timeline of events for the audience of what would happen in the first months of a credit freeze so we understand how it would unfold?
Off the top of my head, I was going to say, no, I can't give you a timeline because, that's a crystal ball thing. But if you're starting the timeline with a credit freeze, I can tell you pretty much exactly what's going to happen. Everything will stop. Within 72 hours, nothing will work. Grocery stores will be empty. You won't be able to get gas. You won't be able to get anything. Within 72 hours, it will become every man for himself. Cash, physical paper cash, will work for barter probably for a couple of weeks, maybe 4 weeks. But after that, we'll be on a barter. The only way to transact will be by barter. And the best thing to own if we're going to barter is junk silver.
This viewer wants to know, which of the currencies do you see will collapse first? A lot of people point out that the US dollar is still the largest world reserve currency out there. But I know I was talking with Rafi Farber the other month, and he was saying that, well, actually, that is a bad thing for the US dollar because most US dollars are outside of the US. And if the US dollar starts to collapse, then it will collapse faster than any of the other currencies. But your take on this question, which currency will collapse first?
I wouldn't characterize it as a collapse, but I think maybe the Chinese yuan. Obviously, we're watching the yen right now really hit the skids. But I think the Chinese are going to revalue gold higher. They've got a real problem. Their debt creation actually went negative late last year, and their M1 money supply has just recently gone negative. So you've got a highly indebted system that's staring deflation right in the face. And the best way to fight deflation is through devaluing your currency. So I suspect you're going to see a revaluation of the yuan versus gold, and that will reprice gold higher, the yuan lower, and it will be in managed form, if you will. But that will, to foreign currencies, it's going to look the same thing as a collapse. So if I had to bet, I would bet that China would be the first currency to truly devalue on purpose versus gold, but it devalues them versus foreign currencies, and that'll drag foreign currencies down with them.
Cletus is wanting to know, we always hear about our national debt, the U.S. national debt, and how terrible it is. But what about China's national debt? Some claim it is terrible and others claim that there's nothing to it. China and her economy led the way out of the 2008 recession, but what is coming appears to be worse. How do you see China's debt and how it could affect the oncoming depression in the U.S.?
Yeah, China, since 2008, anytime the world, it looked like there was going to be a slowdown or an actual deflation, China would reflate. And a devaluation of the yuan, that would be a reflation act. China's national debt on a percentage basis, I don't believe is as high as the U.S., but their total debt, when you include the provinces, the cities, corporate debt, individual debt, they've got a debt problem. Right now, China is considering buying up literally millions of empty homes to try to clean up that real estate market. So it looks to me like something's going to happen in short order. And I think that's something that's going to happen is China's going to devalue. And that makes the debt much more easily payable.
Now, many people have been talking about a issue with the U.S. national debt for decades, right? And this viewer is wanting to know, Paul is wanting to know, why can't we just continue to kick the can down the road? Why are we coming to the breaking point soon?
Because of the math. We're at the point now we paid last year over $1 trillion just in interest. That's more than defense spending, and defense spending in the U.S. is greater than all defense spending in the rest of the world. So we're at $1 trillion. By the end of this year, we're going to be at $1.5 trillion, $1.6 trillion. You can't, the math does not work. You can't pay 1.6 trillion in interest on 4.5 trillion in tax inflows. What's happened is the debt has gotten so large that it's crowding out. It's crowding everything else out. It's going to become if you look at the math, just look at a long-term chart on it. At some point in time, if they kept kicking the can, if markets allowed them to do that, at some point in time, we'd be paying more in interest than we were taking in tax revenues. And it's a mathematical impossibility. So all you have to do is look at the math, the current math, and that's why the can can't get kicked down the road anymore.
Now, Derek is also wanting to know about the issues in the banking system. He's wanting to know your perspective on the current bank failures that we're seeing. And also, do you think there could be bank failures in Canada as well?
Well, there's going to be bank failures all over the world. And the bank failures you're seeing now are small potatoes. All you have to do is look at the commercial real estate market. I just posted an article the other day of the Waldorf Astoria that was owned by Trump. It sold in 2021 for, I think, $137 million. And it just went to auction and sold for $12.5 million. So that's over a 90% drop in value in 3 years' time. But somebody's going to eat those losses because that was debt. It was outstanding. A lot of that was debt. So those bonds have to be written down, and somebody has to eat those losses. And if you look at the banking system, you're looking at literally $1 trillion of losses in debt, in bonds, in credit that had been forwarded. And of course, keep in mind, the reason these properties went to the prices they went to was because credit was available. And now credit has become much tighter. The underwriting standards are tighter. Interest rates are higher. The math doesn't work. And, one of the primary losers will be the banking system. It's going to be 2008, 2009 on steroids.
No, it seems like what we've seen happen when we've seen these smaller banks fail in the last few years, and not so small if you consider, Silicon Valley Bank and First Republic. But it seems like they're, just kind of taken over, right? First Republic being taken over by JP Morgan. Do you see that consolidation to happen, or do you see problems in the big banks as well coming to pass?
Oh, the big banks. The big banks are super dead because they own derivatives. The big banks are in worse shape. If you lift the hood and really inspect the engine, they're in worse shape because they have literally trillions in derivatives. Their leverage is 15, 20 to 1 now. It's out of control. And, you've seen a lot of banks be merged. Failing banks get merged into another bank. A perfect example was Credit Suisse got merged into UBS. Now UBS needs help because they're still chewing on the UBS losses. So, you can't, that's like, it's like a small pile of dog crap mixed in with a big pile of dog crap. in the end, it's still all dog crap. I mean, you're not making one better or worse. It's you're just making the problem bigger.
And a lot of people then are concerned, obviously, of keeping funds in the bank, rightly so, because it seems like it's just digits on the computer screen, right? It could be taken away from you. Now, a lot of people are wanting to get into hard assets like precious metals, as we've talked about. There are other hard assets like land, real estate, all of that. Obviously, commercial real estate seems to be in a very bad spot right now. But your perspective, Jason has a question. Is recreational, rural, or farmland a good investment, even with the government control over it through taxes?
Yeah, the only reason to purchase farmland would be is if you're going to farm it, or if you're going to live rurally. Just understand that, I mean, real estate taxes have almost doubled in the last 5 years. And you could buy a piece of property free and clear, but it's not free and clear because you still have a big nut each year to pay to your municipality or whatever in the form of taxes. And ultimately, in a hyperinflation, you're going to have your property taxed away from you.
We have a few viewers' questions on, your perspective on relocation. I know that you have moved to Texas. Can you explain a little bit for our viewers why you see Texas as a good option, and are there other options even out of the country that you would consider?
Well, yeah, I did. I tried the out of the country. I moved to Costa Rica in 2006 because I saw what was coming, 07, 08. Moved back to Texas in 2011 because my Spanish got good enough to realize that gringos are really not liked in Central South America. We're tolerated. They smile at us because we spend money. So I decided that, and especially with Costa Rica, they use the dollar as their, that's the main reserve currency for their central bank. And my thought process was, when the dollar goes down, gringos are going to be targets. So I decided to move back in 2011 to Texas and fight this thing shoulder to shoulder with like-minded people. And then just as COVID was starting, and I viewed that as, I thought they were going to use that as the excuse to take the banking system down. I moved very rural. I was quasi-rural before, but I'm not off the grid, but I'm pretty far off. So, that's how I got to where I am now. And that's why the signal on a lot of my interviews, not good, because I do everything by dish.
No, I think that's very good. And you making the choice again that you're gonna stay and fight. I think that's a very good perspective there, and not just kind of flee from the problems, but stay here and fight for our freedom here.
There is nowhere to flee now. In my estimation, there is nowhere to flee, especially in the West. I mean, you can't go to Canada, you can't go to Britain, you can't go to Australia, you can't go to New Zealand. Their laws, look what they're thinking about doing in Canada. The hate speech laws. Something that you said 10 years ago, they're going to put you in jail for life. That's, I'm not going there.
We are definitely seeing a lot of concerning developments in other countries, and it seems like the U.S. may be just a few years behind.
There is one other thing about the United States that is not afforded elsewhere. It's called the Second Amendment and the right to protect yourself. And that's why the U.S. has not fallen yet, in my opinion.
People have the guns, definitely, and they're not going to be taken away from the people. Yeah. Now, coming full circle here back to precious metals, I was wondering if we could maybe end with this last viewer's question again from Derek. We're seeing gold hit new all-time highs and silver being smacked down every time it gets close to 30. Are the central banks more scared of rising silver prices opposed to gold?
I guess the way to put it is the central banks are petrified of rising gold, but silver being such a much smaller market, it cannot let silver get out of control, because then that would be it'd be like throwing gasoline on gold's fire. So they've attacked silver harder than they have gold because they can, it's a smaller market, and B, because an explosion in silver is the fuse to an explosion in gold.
And it seems like what we're seeing right now of the physical market taking over, and silver possibly going to break that $30 level. Seems like that might be what we're seeing right now, is the banks are losing control of the price.
Right, across the board. Gold, silver, the miners, I mean, they're all turning up. They're all breaking out. And as I put in my article at the very end, it's literally it's the end of empire, because what a $3,000, $5,000, $50,000 per ounce price on gold says is that the currency is worthless. Once you get to a real high number in gold, then the confidence is completely broken in the fiat currency that's issued by governments unbacked. And it's a vote of no confidence. And the entire system has been held up by confidence and the putting forth of credit. That's what's created this financial nirvana, if you want to call it that. I mean, it's literally a financial nightmare because it's a Ponzi scheme, and we're at the point now of debt saturation. We just talked about, China needing to devalue the yuan. We're at a point of debt saturation. They can't increase debt exponentially like they have to support the Ponzi scheme. And what happens whenever new money stops flowing into a Ponzi scheme? It's exposed and it collapses. And that's where we are now.
And if our viewers are wanting to continue to track this with you and follow the insights that you publish, where can they find you?
Yeah, you can go to my website. It's billholter.com. We generally post 2 or 3 articles a day, post interviews there. There is a contact box on the site if you want to contact me directly. My business email is bholter@proton.me.
Fantastic. And that can all be found on billholter.com. Any last thoughts before we let you go, Bill?
Yeah, I would just say don't try to get cute and don't try to time this, because if you're wrong on your timing and you're not in, you're out.
Definitely. It's important in these times to remember that gold and silver are insurance first and foremost. It's not something you hold to get rich, but insurance first and foremost. And you want to have that insurance instead of not having it. Yep.
Right, exactly.
All right. Well, Bill Holter, thank you so much for your time, and God bless.
Thank you, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 13th through May 20th, 2024, while supplies last. First, we feature 1 ounce Gold Krugerrand at $49.99 over spot. We also have 2023 Silver 1 ounce Krugerrand at $3.10 over spot. And finally, we have Silver half-ounce Canadian Polar Bears at $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.